What is going on, everybody? It's your boy, Bitcoin Birch, coming to you with another episode of Crypto Live. I'm here with my friends Kyle and BTC Jack Sparrow. What's going on, boys?
Nothing much. Another day in the life.
Another day in the crypto life.
Another day and another few red and green dildos flying around. Been very, very happy actually with the recent news that came out in the last couple of days, despite markets going down. I think I'm excited for this show.
Yeah, absolutely. I'm excited to talk about a couple of the stories that we have on deck. Before we get started, quick shout out to Bitcoin Broski. He is out today, but he sends his regards to all of the Crypto Live fam. If you're listening to us on iTunes or Spotify, please leave your feedback. Make sure to subscribe. If you're here on YouTube, smash the like button and do all that other stuff so that way YouTube can share this great content with other people. We're here for episode 26. You boys believe it?
Already?
That's wild, man. You know, I gotta ask you, Joel, waking up today without having to check Twitter, how's that feel?
Oh, God bless, young man. God bless. Yeah, for those who don't know or don't follow me on Twitter or what have you, I assume that's where a lot of the people come from. But Twitter app a couple of days ago, I put it all in a thread. I'm not going away forever. I'm actually still logging into Twitter a couple times a day on the computer, just because it is a part of my business. I do want to make sure I can respond to DMs and I can say hey to my friends, but I did have to delete it off my phone just because we're at this pivotal time right now in our business. With Bitcoin Bravado, we have some really exciting announcements that we'll be sharing in the next 3 to 4 weeks. With our fund and with other things, we just have a lot going on that I need to focus on. But also, as you know, Kyle, like from a mental health standpoint, social media, can kind of creep up on you. And for me personally, it started to get a little too much after the last 18 months of just being on crypto Twitter 100% of the time, 24 hours a day, 7 days a week, 45,000 followers. I'm grateful for that platform. I'm going to continue to use it. I'll be back in full force in January, but I made the commitment to myself a couple months ago. I told some people I'm going to take December off and kind of reflect and get my mental health in order and things like that. And that's what I'm going to do. So I'm excited. Yeah, thank you. Thank you. So we're going to still be doing the stream. Bravado obviously is not going anywhere. Unless Bitcoin's below 3K, we know that we're going to be here. The Discord is popping. We're still making trades every day. This is still my life and my passion. I'm just taking some time off the social media platform. That's all. I think we all need to take a step back time and again. So on the agenda for today, we are going to talk about some crypto whales. We're going to talk about the accumulation that's been happening across a couple of large Ether holders as well as Grayscale. We'll talk a little bit about some crypto hedge funds. And of course, the favorite part of the show, we're going to talk about some price action. I know BTC Jack Sparrow on Monday's episode that I missed shared a pretty good analysis that ended up proving to be spot on. In our Discord, we just caught a nice short scalp on Bitcoin, which was profitable. So we're excited to talk about price action with you guys. We're excited to talk about some different trades. Just remember, however, that we're just a couple of dudes. And nothing that we say should be construed as financial advice. This is all just educational, informational purposes. So do make sure that you keep that in mind and always do your own research. So let's jump right in. Taking a look at the headline for Grayscale. Grayscale continues to buy Bitcoin and now owns over 1% of the circulating Bitcoin supply. How important is this for you guys? Like, what does this mean to you?
So what I'm thinking, first takeaway from this is that this is good because Grayscale is one of the most impactful and powerful groups in the space. And as they continue to buy with some of the deepest pockets that exist in crypto currently, then this is a good indication for me. Obviously, they still have faith. They're not near capitulation, and they understand where they believe this market is going, which is where I think that all of us here believe this market is heading. And so they're positioning themselves as a fund, right? Because they're trying to do best by their investors, by dollar cost averaging even at these levels and probably further down. So I think this is very good news from an investment in crypto standpoint. For the short-term future of crypto, this is a good sign. Rather than Grayscale capitulating and selling their Bitcoin, they're buying more. From that perspective, it's a good thing. Fundamentally, for me, I love Bitcoin and I love what it's trying to accomplish. And I fear that one entity holding 1% of the circulating supply is a little scary for me, because I joined this because I understood the decentralized nature of this space, and a world currency, how it could connect commerce around the world, would be great for international finance and economy. It's a little disheartening for me that one group owns 1% of the supply, because that seems very much controlled to me. But at the same time, so I have conflicting thoughts on this basically, but that's my point.
It's questionable though, because I don't know exactly how many people are invested into this trust. Basically, for the people who are listening to the podcast, to really shortly explain what this trust exactly is and what makes it different from an ETF, is basically you can't buy shares over the counter / on certain exchanges that represent a part of this investment trust. And as people put more money in, the trust grows and they buy more Bitcoin, etc. They are different in a way. They are not an ETF, because they kind of found a way to, go around the SEC. So they didn't need any approval of the SEC. So I don't know how their governance is set up. I don't know how exactly, but I guess a share in this trust is also a share in the consensus on where the trust is going and whether they will be selling or not. So it's probably not 1 or 2 or 3 people that will be able to say like, hey, let's liquidate the entire investment trust. So that's kind of something that doesn't scare me too much. But it is a lot of money. It's probably valued at nearly $1 trillion. It's the largest thing in the US. So it does feel a bit scary. I agree.
Mm-hmm.
Yeah. So Grayscale's investment trust. It's worth what, 7 billion or 700 million. So it's 200,000. I don't know zeros, guys. I don't know zero. So it's roughly 200,000 Bitcoin. In January, Grayscale's Bitcoin investment trust owned about 170,000 Bitcoin. So they've been massive holders of Bitcoin for some time now. Now they're the largest sole entity, holding Bitcoin. I'm not too worried on the decentralization piece, because again, I also don't understand the governance, but I'm fairly certain that it's not just like one dude who can pull the trigger. Technically, if you own the security, if you own the shares, they're backed by that Bitcoin value. So I think that I think just by default, that governance is going to help protect. It is less decentralized when one unit holds 200K, but this is also very, very early in the life cycle of the currency, right? We're still in the first decade of the currency's existence. For those who are a little bit less clear as to how the trust works, so Grayscale Investment Trust, they're the main sponsor of the Bitcoin Investment Trust. And essentially what it does is it charges shareholders an annual expense ratio in order to maintain the fund and continue to manage it. And that charge right now is, I think, 2% of the total assets. Now, Grayscale can liquidate that Bitcoin in order to make sure it's getting its management fee if they don't have enough investor interest. But what we've seen is that there's still a lot of investor interest. And right now, those shares are actually trading at about a 22% premium to Bitcoin. So let me kind of break that down for you. The primary disadvantage of the trust is that the share price of the trust doesn't necessarily mirror what the actual Bitcoin market is doing at a 1-to-1 rate. So for instance, if their shares are trading, just to use simple math, if their shares are trading at $6, and Bitcoin's trading at $6,000, then it's 1-to-1. But right now, for the Bitcoin Investment Trust, because of the 22% premium, that essentially means that for every $1.22 that you invest in the trust, you actually only get $1 worth of Bitcoin ownership in the trust. So you're actually paying a slight premium. Why would you pay that premium? Well, currently, with ETFs on the horizon and things like that, I don't know if it's going to be as attractive, but to pay that. But if you're your historical wealthy fund manager or investor or what have you, paying that premium means you don't have to worry about figuring out how to buy Bitcoin, store Bitcoin, what to do with it, taxes. Everything else is just kind of managed for you by investing in this trust, and it's what you understand. It's what you're comfortable with as an investor because you're used to buying securities, you're used to buying these shares. But there is a premium on it. But the 22% premium also is showing us that people are buying these investment trust shares currently at a 22% premium. So that does continue to prove the theory that when there's blood in the sheets, these rich guys and girls are going to be buying. You're supposed to buy when people are fearful, not when people are greedy. You're supposed to double down on your investments that you believe have long-term fundamentals. And I think that's what we're seeing here. So it does give me some confidence, blood in the sheets. It does give me some confidence that Bitcoin's investment trust sponsored by Grayscale are confident enough to continue to accumulate, and that investors are confident enough to continue to buy those shares at a 22% premium currently. So for every $1.22 you invest in the trust, you get about $1 worth of Bitcoin theoretically, but you're never having to own the physical Bitcoin. So that's kind of my thing on that. And ultimately, I think it's a good take. Any other thoughts?
No, I think that does a pretty good job, honestly. I mean, Grayscale is obviously definitely has incredible exposure to this marketplace, especially when you consider the 22% premium. So they probably are some of the most well-connected, brilliant minds that are operating in the investment side of the crypto space. So as long as they still have faith and are continuing to dollar cost average, then I think that everyone should take that as a very positive sign for the short to long-term future of the investing in crypto.
Yeah, there's no doubt about that. Now, if you want to get invested in the investment trust, I'm not sure how you go about doing that, but I imagine that there's not a whole lot of roadblocks or hoops to jump through. You may not even have to be an accredited investor just because of how it trades publicly. So definitely something to do your research on. Now, Diar, DIAR.co, is a research firm that actually has been putting out a lot of this research. And what I'm sharing on my screen now on YouTube is their Volume 2, Issue 47, where they talk about Ethereum whales accumulate Bitcoin, or accumulate billions rather, but growth remains stagnant. So what they're saying is that the largest active wallets, Ethereum wallets, from early 2017 through now have actually more than doubled the amount of Ethereum they're holding. So it's not like they sold the top and then now we're buying back double. That the amount of Ether in those wallets has actually increased consistently since the beginning of 2017. With some of the recent concerns around Ethereum and specifically ICOs liquidating Ethereum, this is surprising data. And these are essentially unmoved Genesis wallets, early Ethereum wallets. What does that tell you?
Well, that I think can tell you a couple of things. I think it depends on how you think they are funding this, this recent addition to their exposure. And what I mean by that is, are they using profits that they've made throughout their experience in crypto to now buy back Ethereum at these prices? Did they sell Ethereum north of $1,000 and are now able to accumulate such higher holdings? Or are these entities, these Genesis wallets, are these individuals with huge amounts of capital that even at these levels, they can double their stake? I mean, if they were Genesis wallets, they got Ethereum, sub $1? So if they got, if they got Ethereum that cheap, then they either have made immense profits, which I'm sure they have throughout Ethereum's existence, and are now able to accumulate more, or they just have a huge amount of capital behind them anyways and have that much faith in the space. This is, I just think, bullish. I mean, especially with all the FUD around Ethereum and everyone's saying it's a shitcoin and there's no utility and it won't be able to scale and all this stuff. Well, the people that have probably the most money in the space and the most power are continuing to add more Ethereum to their collection. So I think that if crypto investing in crypto has taught me one trend is don't bet against the people that are in charge or have the most money, because they typically win. So I'm not going to sit here and take Ethereum out of my portfolio diversification because of all the FUD surrounding it, when a lot of that is probably only here because the price has dropped so tremendously. So I think this is bullish for Ethereum and for the space.
I mean, it goes back to some of the concerns around decentralization, but it does show that the earliest people invested in Ethereum, or the people who supported Ethereum in late 2016, early 2017, are people who still believe in the long-term value. And I think what it reminds us all to do is take a little bit of a larger perspective, right? So we're looking at the last 8 months in crypto, and that's all anyone can think about. Shit, most of us can't think about anything before 6K, just because we're so in the space every day and everything else. The people who are holding all of this Ethereum, which at one point was valued at $21 billion, today the value of those wallets is $2.3 billion. So absolute massive, savage destruction. They are not concerned at all about a 1 or 2 year snapshot in time of the value of Ethereum. I think when they went into Ethereum, they had a 5 or 10 year outlook, as most successful investors typically do when making plays like this, especially spec plays. And I think this is just a part of the plan. Like, hey, we just have another opportunity to buy Ethereum here. Their dollar cost on Ethereum is certainly sub $10. So they're way up in USD as well. And this just continues to instill confidence that these larger whales have in the underlying technology. So, is it going to make a huge difference in price action in the next 3 to 6 months? No, it's not. Okay. I'm not saying that this means anything for short-term price action, but it should give you an idea of how some of these guys are thinking.
Definitely. And I mean, this is just the distribution of weak hands to strong hands. People who can survive for a long time and who've been into investing for years, like 30 years. And what you got to think about is the fact that, for example, Grayscale owns CoinDesk. A lot of these people who own a lot of Bitcoin or a lot of Ethereum, they will play the market. They will try and create sentiment that goes against their own interest, and their interest. Well, actually, it is aligned with their interest, but it is for other people to sell into their hands and the other way around. So this may continue. Don't let me say this is the bottom, but this will continue as always, as it always happens. You see it in the normal stock markets as well. We create a giant problem out of something, and eventually it doesn't happen. Like China, America right now. Trade agreements. We create a lot of fuzz. People get scared. People sell. Other people buy, and then we continue. So I believe it is a long-term bullish thing.
Mm-hmm. Absolutely,
agreed.
Cool. Yeah, and we know that we've talked about this before. That we know ICOs have been selling off their Ethereum holdings. We know that there's been a lot of profit taking. How else does Ether drop from 1,400 to 100? But around these prices, we drastically lowered our exposure to Ethereum on the fund side at around $400. We knew that if that number broke, it was going to be bad. Now around 100, I'm interested in getting some exposure again, and it looks like I'm not alone in that thought. And I just have to continue to remind myself that people way smarter, way richer, who have been doing this sort of stuff way longer are making plays that most of us are too scared to make, and that hopefully I can just keep reminding myself, when I do start to take on additional positions for a longer term approach, like, hey, like I'm following the smart, but the dumb money is the retail investor, the people listening, us. We're the dumb money. Technically, we're the ones who are supposed to capitulate, sell, cry, and leave with less than we came with. I'm just trying to make sure I don't fit that mold, and I've been in crypto now 3 years. I'm still way up. I don't want to take much more downside, but I'm going to continue to try to play the way the whales are playing and see if it works out for me. Worst case, we're all more than qualified to work at McDonald's, and they have really solid benets. So actually probably better insurance than I have now.
I mean, when we look at charts, like TA artists and whatever, all we ever talk about is about distribution and accumulation, and people are trying to pinpoint where accumulation is on a chart. and where distribution is on a chart. And it, a lot of times the chart can tell you, but preferably you want to have the fundamentals behind you. So if someone is telling you, hey, I had a bag of 1,000 Ethereum, and now I have a bag of 2,000 Ethereum, and I have a lot of friends who have a lot more who doubled their holdings as well. This is literal accumulation, and at that point you should say fuck the charts. No, you got someone who owned 10% of the total circulating supply of Ethereum with 500 of his friends, and now they own 20% of it. That is accumulation. There is no other way you can put it. And maybe they will go up to 25%. Maybe there will be other people like in the top 1,000 that want to accumulate, and they will stop to accumulate right now. But it is accumulation. They are putting more Ethereum into one place. It's very simple.
Are we about to see? Are we about to be in this position where it's like actually time to start buying alts because they are down 95%? So again, I mentioned the fund a lot because it's taught me a lot in the last year. And as much as I like to trade against Bitcoin, when we report to investors, it's all USD, right? No external investor gives a shit if we increased our Bitcoin holding if they lost 40% of their capital. So we have to report in USD. So I've had to start thinking more about USD. And as a result, looking at some of these altcoins that are down 97, 98%. NEO is $7, guys. The first time I ever bought NEO in my career in crypto, it was $3. So I was a genius then, and now it's probably going to go back to $3 or $4. So at what point
to add shares again?
Are they going to rebrand and go full circle all the way back to ant shares at this rate? But I kind of woke up this morning and my first thought for some reason was short Bitcoin, long alts. And this that might be a crazy thing to say, but I am still short-term bearish on Bitcoin. We'll take a look at our capitulation chart. We'll do some technical analysis before we're done. Our capitulation chart we shared weeks ago is playing out almost perfectly. So we still have some opportunity there, but some of these alts, man, Paragon, the company that was subpoenaed by the SEC to repay their ICO investors, they're based out of California. They're like a marijuana co-working space. Absolutely, I won't even say anything. I won't say anything further, but they pumped 800% overnight. They're a top 100 coin with a $35 million, pumped 800% overnight. Particle, a coin that I followed for a long time, just randomly 2x'd in the last 3 days on 8 times as much volume as it's had historically. So are we getting to a point where with this super low liquidity on altcoins, we're going to see the reverse of what we've seen thus far this year? Low liquidity, meaning that when someone's looking to sell, there's not enough people looking to buy. And so they have to go down the order book, which drops the price more egregiously. Well, guys, the reverse does hold true as well. And when volume starts to come back, it won't take much. It only takes one fund with 500K. To go and buy 10 alts and send each of them 2 or 3x because there's no liquidity on the order book side. So is this the time to short Bitcoin and long alts? As I don't know. I mean, I kind of want to. What do you think?
Yeah, if we're talking in terms of USD, then I wouldn't probably short Bitcoin and long alts. I do not believe that that's because I mean then you're wanting Bitcoin to go down, and every time Bitcoin goes down in terms of USD, well, that's the only thing it can go really down in terms of alts seem to struggle even harder. So I don't know if that'll be the strategy that I actually utilize, but I do believe
up to this point.
Up to this point, yeah, you're right. I mean, like, could Bitcoin go down? I mean, man, if we actually see a day where I go to CoinMarketCap and Bitcoin is in the red and alts are in the green, like that would be crazy. That'd be the first time I think I've ever seen that outside of maybe like December of last year. But you know what? If I start to see that trend occur, then I'll consider it. But I think that right now, for me, I would wait to see that happen at like one day in the market at least before I would consider moving that way as far as that, because I just see so much correlation between these assets in terms of price action. Like, it's funny to me, I can like execute a few trades on Binance, and I just, I open I'll get like exposure, like it's 6 or 7 different cryptos to play a swing. And I know where to step my stop losses because every chart looks exactly the same in terms of USD or USDT. So I don't know if I'm ready to long alts and short Bitcoin, but just because I see too much correlation.
To your point, though, that's true for most people in the space. Statistically, most people in the space, they've never seen inverse correlation. But for my first year and a half in the crypto space, it was all inversely correlated, and there was a lot of that going on. So, you know, I'm almost of the mindset that as some of the big money continues to get spent, they're buying a lot of shitcoins. Like, they know the upside, the 10,000% upside is not in Bitcoin. And so, you know, just other fund managers that I've spoken to, and these are mostly family. I don't know what the fuck Pantera's do. I don't know. But I do know what funds with $5 and $10 million under management are doing. I know what several of them are doing. And they're buying shitcoins. They're only buying like a Bitcoin worth. They're only throwing 4 or 5K. They're only throwing a micro percent, but they're buying them. And I just wonder if that it's even a decent hedge play, because again, if Bitcoin dumps and takes all with it, if you're shorting Bitcoin, then you're hedged on those positions, especially if you're not over leveraging yourself on alts. But if there is that inverse correlation that starts to come through, it might not be as bad. And we've also seen a slight inverse correlation recently with altcoins versus Bitcoin. So we've seen Bitcoin dump and we've seen alts have green days versus Bitcoin. And so if Bitcoin dumps and I can earn more of it just by holding alts, even if I am losing some USD, it's not as much downside either. So, you know, I'm not there yet. I'm still waiting to see how this trend does play out in the next couple of weeks, especially. But I'm getting kind of close to wanting to get NEO at $7 again, you know, or Ethereum at 100. My target for Ethereum is $79, but I gotta buy it at $79, I think. So keep an eye on that.
Yeah.
Let's take a look at some price action. What do we got? BTC Jack Sparrow,
All right.
otherwise known as Ronnie.
Ronnie. Is my screen visible?
Nope.
No, it's not visible.
While Jack is pulling that up real quick, I gotta say I was reading that the article about how crypto hedge funds are getting creative as the bear market tightens its grip, and I honestly, it's a funny read for me, at least, because they're having to implore new strategies, right? Because crypto's been tough in 2018, and they've had to implore long and short strategies. So they've actually had to short the thing too. It's like, that blows my mind open that they didn't have these. The actual hedge funds are now having to implore short strategies. It's like, if you're going to operate a fund and you've never short sold an asset before, like, what the hell? Like, that just shows you, like, that's just where crypto is, man. Is, you know, a lot of people made a lot of money and have these ideas and everything like that, and that's fine. But it's just wild to me, you know, like, I mean, and past the long and short selling, like, you know, it just
now, most people know Ari Paul, more than likely, at least in our demographic of people who are listening. Again, thank you guys so much for tuning in. Do make sure you hit the subscribe button and like the videos, just so that way YouTube's algorithm can continue to give us some favors there. But Ari Paul, he actually advises a company that I advise. We actually both advise a startup here in Chicago. It's not even a crypto startup. It's just a startup, you know, building a cool product. But I have not had an opportunity to meet him in person. He's the co-founder of Block Tower Capital. He's fairly well known in the crypto space. And what he said was, it's hard to grow a strong business in a bull market because you aren't forced to make tough decisions. Tough decisions lead to better allocation, and they're looking for new ways to trim the fat. Budgeting is a new thing in this market. He's basically saying that up until March or April, we didn't even think about budgeting. We didn't even think about hiring like too many people or spending too much money, because in a bull market, you're kind of blinded by that. And that, to your point, Kyle, is surprising to me. This is a fund and a person I have a lot of respect for, and I'm certainly not gonna try to play on the sidelines here or be the peanut gallery, but yeah, they're looking at new opportunities like mining. Their market making is another thing that I've seen funds do. It's something that we actually offer as well. So there's some small money to be made there, and then also, like you said, shorting Bitcoin as well, which hopefully isn't as exciting to do, you know, soon. You know, we're hoping that the RR on the long plays better. So let's take a look at the chart here, Ronnie. Sure. What do we got?
Well, the chart that I was sharing on Monday, that I drew a few days before, I think I drew it on Friday, we had price action consolidating around just above like $4,000. And I had two scenarios. Either we go down and then we'll have to short the retest of 4,000, or we go up and then we'll have to long the retest of like 42, 42.50.
Let me cut you off real quick too, just
Cool.
because you said something that's important. I drew two scenarios. The first, this is one of the reasons I had to delete Twitter for a month, is the first reaction that a lot of people have to that. Oh, it could go up or down. No shit. As a good trader and as a good risk manager, you are always drawing both multiple scenarios, and that way you're prepared, because no one, at least on this podcast, is pretending to be a freaking wizard or a psychic, right? And so I always am looking at two scenarios, and then I make decisions when I get confirmation of one of the two scenarios playing out. That's what we're looking at here. So before we get any troll, of course it'll go up or down. Just follow along here.
Markets are irrational as fuck. Like always, they're always irrational. So they almost never represent the price of the underlying asset. That's something you got to know. So even though Bitcoin is going to be listed as an ETF, that does not guarantee that Bitcoin will go up. It will probably do that, but we never know anything for sure. So yeah, Bitcoin dropped below 4,000. And the retest twice.
You shared actually on Monday's episode, right? So you shared before this breakdown on Monday.
Yeah, and we had a retest twice of 4,000, which was a very profitable resistance to go short on. And I kind of thought we would initially dip all the way actually to 3,700, but we didn't get there. We got to like 37, 35. And now we actually touched that 3,700 block. And I kind of thought that a long here would be profitable, but I'm not really seeing the bounce yet. So I'm not really too convinced that this will be where the downward price action will stop, and we'll see a reversal to actually retest some resistances. So what's going to happen here, we're currently at $3,700. And if we don't see a bounce, I think that we're at least going to test our yearly low of 3,433 or somewhere around those lines. What usually happens when you get to these long price wick levels is so-called swing failure pattern. So there's a lot of stops that people have just below this level. And if you are someone with a large bag and you can actually move markets a little bit, you will try to see if you can push price underneath this level and to hit those stops, because it creates liquidity if you want to go long. If we see a swing failure pattern, that means that we just dip below this level for like, I don't know, 30, 40, 50 bucks and then swing back above it. It's probably a very bullish sign, and that we're probably going to retest our range high, which in this case, on the larger scheme of things, is probably around $4,400. So that's probably where I'm looking. If we go back to 4,000 from here, I'm not looking to short it, because it will be our third test of that level. And honestly, the probability of those setups the third or the fourth time becomes weaker and weaker. So I would just sit out once we actually get there, and perhaps long a retest if we break $4,000 again. So that's pretty much my low time frame outlook on the 4 hour. And on the larger scheme of things, like we've been talking about that descending triangle that has a target of $3,000, and everyone kept saying this. And I thought, well, we gotta know how big the chance actually is that you actually hit your target of a descending triangle. And turns out it's only 54% of the times that you actually hit that target. So a 46% chance that this level got front ran. I'm still kind of expecting that we got to have some retest of a bigger resistance above like 4,800 or 5,000, but it may actually not happen. We may just straight crash to the 3K area.
We still haven't hit that target. Like that descending triangle that we covered 6 weeks ago that finally did break down. After all this time, it's been 3-4 weeks. We still haven't hit that target, and we didn't. I wouldn't expect to hit that big of a target in one candle either. So What I can't see it on this screen. It might show on YouTube, but what is that bottom line there? What's that? Oh, 3102, right?
The bottom, the red bottom line here.
Yeah, that's 3102.
It's exactly 3K. Let's put it at 3K.
Okay, 3K. Okay, perfect. Yeah, and so that's the meme target, right? That's. How do you feel about 3K? 3K has been the meme target since April, since maybe even March. It's been the perma bear ultimate. Yeah, we have the 1700 targets out there and everything else, and I'm not going to sit here and say that's impossible, but 3K has been the target everyone's been calling for. Do you think it's going to get front run by people looking to get in and long it before we quite retest, or do you think it's going to hit 3K, which I think it will, and then people sit there and wait for some type of confirmation or wait for a volume pickup, don't get it because everyone's waiting, and then ultimately that's what pushes it lower.
If you think about it in a very simplistic way, in markets there's around these levels, there's three things that can happen. Either a level gets front run, so people place a lot of orders in front of a level and it actually never reaches it, or it exactly touches that level, or the level is being used by bigger whales and used as a liquidity point. So a lot of people actually go long or short on the level, and then the whales push it past, triggering all the stop losses and then taking over the positions. And if you think about the probability of exactly hitting a target, it's probably a lot lower than the other two scenarios. And so if you add the other two scenarios, the probabilities together, they are probably going to come out on top. So if everyone thinks we're going to go to 3K, I think it's more likely that we either get front run, or once we get through 3K, I'm pretty sure that we're going to go below 3K because it's too much of an opportunity to push people out of their positions and have whales to take over those positions. So yeah, 3K meme. I think if we get to 3K, we're probably going to dip below 3K by $100 or $200. I think that's fair. Yeah. Fairly good odds that's going to happen.
Yeah, I agree with you, Ronnie. I think that, the two strategies that you outlined have a higher probability are the ones that we'll see. I mean, I think that at this point, people realize that, if this is still retail selling, pushing the price lower, I'll be surprised. I think this is a designed push, and I think it's to put it in a place where, the institutional money, the real money can start to accumulate. And if this descending triangle plays out and we see a retracement to 3K, what this bear market has taught me is that exactly where we think that we can actually breathe and we might get a little bit of a bounce is exactly where they'll take it, that extra 10, 15% lower to the 2,500 range that we've outlined together. I think that if everyone believes 3K is going to be that mark where we finally turn around, then yes, the stops will be run. All the people that take positions at 3K will get stopped out. And then in a final capitulation type manner, that is where potentially we could see a bottom. In the dollar cost average analysis that we put out and Ronnie headlined honestly, we have the lion's share of our DCA, the amount of money that we're willing to dollar cost average into Bitcoin from 2,400 to 2,625. So I think that we're acting under the hypothesis that what will happen is we'll get to 3K, and the people that buy at 3K will get stopped out by the mean market makers, and then hopefully, our strategy is that the bottom will occur below the 3K level. But that's, it's always adjustable. We always have to read and react, but that's kind of what we've,
And it obviously, just to clarify, it wouldn't be market makers. They don't have a bearing on price, but just to your point, the big players in the space, it's the players who the whales, if you will, or you just general trade. There's just not a lot of excitement. There's just not a lot of volume, and so it's all of us. It's all of us trading and making decisions, and you're just trying to bet on the right side of it. Some of you guys may remember. I'm sharing my screen right now. You may remember that chart from where we shared it on the Bravado Telegram. Got about 18,000 views, and this is our capitulation chart. That we shared a while back, actually. And the reason I wanted to pull this up is because I do want to take another look at this chart and see kind of what we're looking at. So for those who can't see, you probably, hopefully you follow us at Bitcoin Bravado on Telegram. And then you can scroll up and you can see it there. But essentially, we had the breakdown of 6,500, and we were targeting about $4,100 for a bounce. And then we were looking for a slow, kind of curved downward consolidation to about 3,500. And this is over the course of literally 3 months. So this is over the course of this takes us well into Q1 of 2019. If what we saw with the breakdown of 6K is in fact capitulation, which I've made the argument multiple times now that it was, then this is probably what it would look like. So now let's take a look at what it actually looks like. And I will just share my other screen and see how close we were on that little guesstimation, if you will, on that nice little guesstimation. So let's take a quick look. We're talking about a bounce target of around 41, which is the red line that we have indicated. And then, so dumping down, and then a bounce target, and then just get my tools here. So dumping down, and then bouncing, retesting. It's so fucking hard to use this shit without a mouse. Retesting, and then ultimately finding that downward consolidation. So looking something like this. This is kind of how we had it drawn out. So we were off by like $300 or $400. I point that out because we're still following the exact same pattern. We have our capitulation. We have our bounce at $3,500, which retested $4,500 just about. And now we're seeing that downward consolidation. We're seeing, a downward move. It's not been nearly as aggressive. I think we actually have some short-term upside if this continues to play out. And again, this takes us through Q1 of this year. And with this new adjusted target, kind of something like this. And what I'm showing here for those of you on the podcast is, again, we bounced at 3,500. We found resistance at around 4,450, and this is the Bitfinex price. Some slow downward, boring consolidation where Bitcoin inches its way back towards that 3K target, ultimately bottoming out, give or take a couple $100 in this area, and then taking a nice, slow, consolidated approach back up. And that's what capitulation would look like. And right now, we have all the markers of capitulation. Tomorrow is a green day. The day after is a red day. The day after is a green day, slowly working its way down. I think the alternative, what we're talking about, is that we break support here at 3,500, and instead of breaking it slowly and kind of just continue to massage our way down, it just dumps from there, right? And we see a final stretch, a final capitulation with a red candle that rivals that of November 19th, and that's where we have our $2,700 target, which is the low from August of 2017. So I don't know that we're going to see that. I don't know what we're going to see. No one knows for sure. We're hedged short either way, but so far it's actually been playing out like textbook capitulation. What happened from the breakdown from 6K has been textbook capitulation. And if that's the case and it continues to play out, that should be something that makes most of us pretty excited, right? It should get us pretty riled up, pretty excited about Q1 in 2019.
Yeah, I mean, I made a volume analysis last week where I combined the volume of most major exchanges available on TradingView and take like the Euro pairs, the Korean won pairs, the Japanese yen pairs, the USD pairs, and I took Mt. Gox USD, Euro, and Japanese yen pairs and tried to compare how volume looked back then and right now. And to be honest, I don't think we're in the reversal stage. We're probably not really ready to any major move up, but like volume wise, relatively wise, there are similarities. So I think we're either in capitulation or we've seen capitulation. So we definitely could see lower lows. We could see a bounce and then have a final capitulation. It's really tough to say, but I really like that idea that you just shared about it kind of looks like an Adam and Eve, right?
Yeah, it looks just like an Adam and Eve. It's just that the low on the Adam part, it it looks like it'll be lower than the previous bottom of 35. And another thing to point out is the volume profile. I'm only looking at Bitfinex here, but Bitstamp is a little bit more aggressive, and Bitstamp actually has the best historical price action, or the historical price history on Bitcoin. We have more buy volume since November 21st to today, December 5th. There's been more Bitcoin buy volume than we've seen, with the exception of one day in October, than we've seen since July. We've seen more cumulative buy volume since October than that we've seen since from like May through September. So there is massive buys happening at these prices. And that's why I think that another sharp drop to 2,700 is a lot less likely at this point than just a slow and methodical consolidation downwards over the next 8 weeks, and then a consolidation back up to about 4,500 to 5K over in the 8 weeks following. And that is why I'm a little bit more bullish on alts. I think that alts have a much better USD RR, much better opportunity if Bitcoin's movement is relatively slow and stagnant. Of course, a massive drop from here in Bitcoin down to anything silly is going to destroy altcoins. And that's why I think a short hedge is nice too. But yeah, you got an Adam pattern pulled up here for our live viewers. What are you looking at?
Yeah, so I did a bit more digging because I knew about the Adam and Eve pattern, but what I didn't know was some more statistics behind it, taken from mostly stock markets, because there's the most historical data. But what is interesting for Adam and Eve patterns is that they when there is a short term, so a very sharp decline leading into the double bottom of Adam and Eve, usually this leads to the best post breakout result. So the breakout of an Adam and Eve is pretty much the range high, which at this very moment, if we would actually complete the Adam and Eve pattern, would be around $4,400 on Bitstamp, probably a little bit higher on Bitfinex due to slight premium there. And the other interesting fact is that if there is a flat base leading into the pattern, so we have a flat base right here, we had the 6K bottom that was flat for a long time, then we had the sharp decline. This is also something that aids the performance post breakout for an Adam and Eve pattern. And then there is a better performance if the volume leading into the pattern and during the pattern drops. And this is the volume across all major exchanges listed on TradingView, including the Japanese yen, Korean won, all the different bigger pairs that are involved in trading Bitcoin. And we see a sharp decline in that as well. So to be honest, there is no Adam and Steve or Adam and Eve pattern to be seen here until we actually break out of that 4,400 level. But if we do, with the current statistics and indicators that we have, it would probably perform really, really well. So it could actually take weeks, and the longer it takes, the stronger it's probably going to be. So
yeah, that's right.
Let's hope for that.
A while. Right. We want it to take a while. We're at this point, like, again, this was capitulation, guys. It doesn't mean it's the bottom. I've said that 1,000 times on this podcast, on Twitter, and everywhere else. Doesn't mean it's the bottom. It was capitulation. Doesn't mean there won't be more capitulation. But I really am bullish on kind of we're definitely going down. I'm definitely making my bets that we're going to retest, or not. We're going to retest the range low, and we're also going to flirt with 3K. But I don't think it's going to be as quick as people think. I think it's just going to kind of work its way down and then hopefully consolidate. And that should give everyone, if that plays out, I'm looking forward to the podcast, hopefully in 3, 4, 5 weeks time, where we're looking at the bottom of that Steve pattern, or we're looking at the bottom of that consolidation, and we're starting to say, hey, this is playing exactly how we thought it would back on December 5th. And now it's time to BTFD, now it's time to take some more DCA positions. So
yeah. Well, people always like to question, what are your targets then? Well, if this Adam and Eve pattern would to be play out, there are some formulas you can find on the internet, and you can cross-reference that across historical data. But like the high range would probably be around $5,350. So let's make that $5,400. This is crypto, it's volatile, and the minimum target would probably be around $5,000 if this plays out. So I mean, these numbers kind of align with some consolidations and resistances we have on top. So I'm really gonna watch this chart over the next 2 months to see how that's gonna play out. And I mean, there's you can chart everything you want, you know, like I've charted this whole fractal from 2014. It could suggest that we actually even go to $1,800. We don't know. And this whole chart actually suggests that we may see another low after some bounce. So I mean, prepare yourself and know where you are willing to buy something, and make sure that you're always prepared for a lower low. Make sure that you're not all in. Keep something to invest at the moment you see a reversal, so you at least live to fight another day.
Yeah, and then I mean, this can probably wrap things up unless someone else has something to say. But that's what we highlighted in our dollar cost average analysis. Is, you know, we're trying to peg on these levels moving down. It looks like it will be 60 or 75% of our investment stack. We were willing to dollar cost average down to a, you know, $1,000 Bitcoin price. So we're willing to put 75% even in at the worst case scenario, but we're leaving 25% for signs of reversal too, because that is just, we're waiting for that confirmation. It's the smart way to approach it, rather than just having all of your stack dollar cost average down in the event that Bitcoin, you know, inevitably goes even deeper. So we need to make sure that we have capital left over for a reversal.
Cool. Well, I think that will do it for Wednesday's episode. Really good conversation, guys. I think that we were able to dive into this in pretty good detail. So hopefully, again, if you're listening or watching on YouTube, you enjoyed some of the content that we're sharing. And continue to tune in and subscribe. Make sure to smash that like, subscribe, and if you are on iTunes and Spotify, make sure to throw us a follow and leave your feedback. Leave a review on iTunes. We read those, and we will continue to implement. There's going to be a lot more content coming from Bravado and Bravado's YouTube channel. If you are interested in checking out our premium trading community, it's trybravado.com. So feel free to read through that. It's less than $2 a day, and you can join the fun with us all the time. That's my shill. BTC, Jack Sparrow, and Kyle, I appreciate you, gentlemen, and we will talk to you guys on Friday. Cheers.
See ya.